Blue Owl Corporation stock, ticker symbol OBDC. This stock is up almost 12% on the year-to-date chart, slightly outperforming the S&P 500. Looking at the recent earnings report, we see some mixed results, but more on that in a minute. People love Blue Owl stock because of multiple reasons, one of the main thing being the dividend. And I understand why with dividend yield at 8.5%, which is a great number. If we look at the past 5 years, we see that Blue Owl stock was beaten by the S&P 500. So could this be the perfect time to buy Blue Owl stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does OBDC do? Blue Owl Capital Corporation is a specialty finance company and business development company focused on providing direct lending solutions to US middle market companies. The company seeks to generate current income and capital appreciation by targeting investment opportunities. Looking at the most recent earnings, we see that net asset value per share was reported at $15.47, up from $15.45 year over year. So it is only a small increase. Net investment income per share was reported at $0.47, down from $0.51. Return on equity was reported at 12%, which is a great number. In the first quarter, Blue Owl Capital paid a $0.42 dividend, which included a $0.05 supplemental dividend. Of the upcoming quarter, dividends are declared at $0.37 per share, in line with the previous quarter. The total portfolio was reported at $12.4 billion. Down from $12.7 billion, while the companies increased from 193 to 198 in total. Looking at their debt, we see that there is $2.4 billion in liquidity, and debt to equity is a little over 1, which is fine by me. The target range is at 0.9 to 1.25, also looking really good to me. Looking at the diversification, we see that the top 10 possessions represent 25% of their portfolio, which looks good to me. The biggest position is at 4%, way below my 10% maximum. Looking at the industry diversification, we see that internet software and services is the biggest with almost 12%, a little above the 10% maximum I prefer, but nothing too crazy. The 9.5% exposure to insurance is also an interesting one. And the thing that I really like about Blue Owl Capital is the fact that they pay a lot of supplemental dividends as of lately. Over a longer period of time, we see that dividends also increase quite a lot. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Blue Owl Capital is a $6.4 billion market cap company. PE ratio is at 8.3, indicating they are undervalued. Later in this video I will show you my 3 price targets for Blue Owl Capital stock. So make sure to watch until the end. Revenue is at $850 million, and in this graph we see that revenue went up in the long run. It has to be said that growth is slowing down a bit, but it is still looking really good to me. Margins are going up and down a lot, but most recently margins are down a bit, so that is something to keep your eye on. EPS is pretty much the same story as the revenue and margins. It is growing, which is the positive part here. Analysis expect that EPS is going to decrease from here, which is very interesting. In 2025, they expect EPS to decrease a whopping 6%. For the revenue analysis, expect that in 2024 it will be a decrease. but in 2025 it is again expected to see bigger losses. Return on assets is sitting at 5.7%, which is a decent number. Return on equity looks really good. And since this is a finance company, there is no return on invested capital. Current ratio is at 1.67, which is a great number. It is also pretty steady historically, so this looks good to me. Right now, Blue Owl Capital has almost 7 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Blue Owl Capital has 572 million in total cash, so they can't pay down a big chunk of their debt. To me, this doesn't look good. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is looking really terrible in the past couple of years. Most recently, they managed to report some positive numbers here. Let's see if they can continue doing this in the coming years. Shares outstanding have increased over a longer period of time, but most recently they didn't issue a lot of new shares, so that's very interesting. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 8.5%, which is a great number. Annual payout is at $1.38 and payout ratio is at 69%. I prefer 50% or lower. So right now they have only 31% left in cash to buy back shares, pay down debt, do acquisitions and all other things. But it has to be said that for companies like Blue Owl Capital, it is very common to have a higher payout ratio given their dividend yield. And now it gets really interesting. There is no 5-year growth rate yet, but they have increased the dividends for 2 years in a row. And if you take a look at these numbers, the dividends paid since 2019, you see that Blue Owl Capital did increase the dividends at a decent pace historically. But in 2021 they decreased the dividends due to lockdown periods. From there they started increasing them again. Payout ratio is a very important metric with dividends and tells you if the dividends are safe. And here we see that historically it looked pretty good. It is coming down, which is the thing I like the most here. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to stay flat from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare Blue Owl Capital stock with the overall market, in this case the S&P 500. Next to that I added ARCC and Main. On the 5-year chart we see that Blue Owl stock was beaten by the S&P 500 big time. In total Blue Owl Capital returned 71%, and keep in mind this is including dividends. The S&P 500 is sitting at 95% return. Main Street also came really close with 87%, and Ares Capital is sitting at almost 90% return. On the 1-year chart we see that things are changing drastically, with 45% return for Blue Owl Capital and almost 35% for Main Street. ARCC had the lowest return with 24%, and the S&P 500 is sitting at 27%. On the 6-month chart it is again Blue Owl Capital beating the S&P 500, but this time Main Street had an even higher return with almost 32%. On the 1-month chart it is again Blue Owl Capital that beats the S&P 500 with 5% return. But again, Main had the highest return here. Bottom line, Blue Owl Capital was beaten by the S&P 500 in the long run, but in the short run it looks pretty interesting. So could this be the perfect time to buy Blue Owl stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 5, 7.5 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 80, 85 and 90%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 7, 8 and 9. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now Blue Owl Capital stock is at $16.4. I hit analyze and we see a few green numbers. We have a low price target of $15, we have a mid price target of $19.6 and we have a high price target of $25.6. To me the mid price target is the most justified here, telling me that this stock is undervalued based on this number. Which price target do you think is the most justified? Let me know in the comments down below. My final conclusion on Blue Owl Capital is that it is looking pretty interesting. Most fundamentals look really good to me, and it seems to be a great opportunity. Of course, it is a high risk, high reward company. This will mean that you need to check every number from time to time to see if it still makes sense to invest in this company. With a dividend yield of 8.5%, I think you can't go wrong. They are also increasing them at a pretty good rate with relatively low payout ratio. If COVID didn't happen, they also would have a better track record. From a value point of view, things also look pretty good to me. I do think they are undervalued, and after analyzing ARA's capital yesterday, I think I got two interesting companies to invest in. But before I open a position in Blue Owl Capital, I will do some more research. In the meantime, I put them on my buy list because I also want to limit my exposure to a high risk, high reward company with a maximum of 5%. But in the upcoming months, I will definitely open a position in Blue Owl Capital. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.